Hi, Mark. Thank you so much for accepting the interview at your office.
Thank you very much. Nice to be here.
Sure. So the first question is about S&P. S&P
hmm
just had its best May in 35
Mm.
years. So as we enter June, which is historically a quiet month in the summer,
Mm.
do you see technical confirmation for continued strength, or are momentum indicators actually suggesting caution for investors?
So my thinking is that we do likely have some type of a stalling out or consolidation that starts sometime in June. Um, S&P now is about 3% from all-time highs. It's very close, as well as the Nasdaq. I think it's going to get there in the next week. So I do suspect that the early part of June will allow for a rally. My target is anywhere between 60.50 to 61.50, which is right near all-time highs from February. The Nasdaq, that would be about 22,222, I think, for Nasdaq 100. For QQQ, about 540 is my target. After that, we can consolidate and pull back a little bit, but the momentum is still very, very strong. So you mentioned momentum. That's actually improved quite a bit on a weekly basis. We've seen indicators like MACD, moving average convergence divergence, turn positive. Um, the only momentum and breadth concerns are really on a short-term basis because the market has gone sideways a bit in the last 2 weeks. So that's caused a little bit of weakening in short-term momentum, but it really doesn't present any sort of challenge to the market, I think, over the next few months. So I remain very optimistic. My target's 66.50 for the S&P by year end. I think that's going to happen sometime into the fall. So I think we are going to have an acceleration higher at a time when many investors remain caught off guard. A lot of institutional investors have really missed this rally. They've been underinvested and now being forced to play catch up and try to chase the rally when many of them still remain unconvinced that tariffs are going away. And I don't think they will go away, but this is just a time when it's right to ignore the fear and pay attention to the economy, to earnings, and to really the positives of the technical momentum, which have gotten better and better.
So what is the target for Nasdaq 100 by the end of 2025?
Hmm. Well, I think initially we were going to hold, those prior all-time high peaks, and then we'll have a minor pullback. I think the bigger correction will happen in the month of August, probably into October, and that normally drives with seasonality, which pulls back. So I'm not really willing to give a year-end target for the Nasdaq 100 or composite, but I think that uh, ideally we should run up, meaning we should advance into August, and then we're likely going to have a stalling out. Even the month of June historically has been quite weak, seasonally speaking. It's one of the worst months for the Dow Jones Industrial Average. So I think it's going to be a choppy month, but I do suspect that by June expiration, it's a key pivotal time for markets that will start to turn back to the upside.
The upside.
Mm-hmm.
So you're quite positive about the markets,
I,
right?
I am. I think that I don't like to mention the R word, recession. I think that's probably not going to happen this year. And I don't think that equities are in a bear market. I think this has just purely been, a tactical, short-term, but severe sell-off that we've seen from February to April. And now we're starting to turn higher. So, um, a lot of people are very pessimistic. I always, encourage people not to listen to the news, don't listen to politics, simply follow what technical trends are telling you and what earnings, which remain actually quite good. So, uh, for those that are worried about Trump and are on the sidelines, unfortunately, they've missed, a 20% rally off the lows, and that's likely going to keep going.
And also the energy and technology sectors are bouncing back this week recently, leading
Mm.
the rally. So do you think this trend would continue?
I do think that the trend in technology can continue.
Okay.
That's really the best sector over the last month, and
Last few years,
yeah,
actually. Yeah.
last few years as well. Right, this year it's a little bit of a laggard, just given the extent to which it fell the first part of the year. But many of these companies have helped all of our lives improve meaningfully. They're very good companies. They still have excellent earnings growth. Technically, the comeback in the Mag 7 is very constructive to me.
Yeah, and year to date speaking, so US stock market have underperformed European and Asian markets year
Mm.
to date, right? So are you seeing relative strengths like shifting overseas?
No, I really haven't seen that. We've seen about 4.5 months of underperformance in the US now. But when you look at the
Yes.
longer term trends over the last 20, 30 years, they remain very bullish and very constructive for US assets. So I like buying dips in the S&P compared to the rest of the world, and I think we'll see that start to stabilize and push higher.
Mhm. You just mentioned because in the past 4 months, U.S. equity markets have
Mm.
underperformed, as well as right now we've seen some volatility in U.S. dollars, the
Mm.
bond market,
Mm.
especially the U.S. dollars have come through some broad pressures this recent weeks following renewed tariff threats, as
Right.
well as there are some macroeconomic data like the
Right.
manufacturing data and physical concerns, high debt levels.
Mm.
So do you think the weakness of dollar has more room to run, or dollar will have some room to grow?
I do think the dollar is going to weaken further over the next few months.
Mhm.
Technically, it's in a very weak state right now. I see evidence of the yen likely rallying up to right around 136,
Yeah.
and I see both euro and sterling pushing higher, which comprise the majority of the components against the US dollar index, the DXY. So, I think the dollar index likely goes to about 93 or 94. So we could probably see about another 5% down over the
Mhm.
next few months. The one worry I have from being short the dollar is that I think the US is going to remain much stronger than the rest of the world. And, eventually Europe is going to be far weaker. The US is much, much stronger in many ways. So I sense that dollar weakness is going to prove to be an opportunity,
Mhm.
likely by the fall. And we're likely going to see the start of dollar strength as well as treasury yields probably bouncing at that time. Um, but for the time being, look, manufacturing concerns along with just trade uncertainty will cause the dollar to fall. And that's actually precisely what the Treasury Secretary, Scott
They want
Bessent,
it to
wants.
be, yes.
Like they want the dollar to be weak so we can actually have exports rise to meet those imports. So it'll help
And
our
lower the debt.
deficit.
Yeah.
That's right. So at a time when everybody's concerned about Trump's actions leading the dollar lower, it's actually part of a master plan, I think, to try to get exports up. And it will help emerging markets. It'll help commodities. So I think China actually benefits from that in terms of the stock market from the dollar being weaker.
Mhm.
But it's all part of a plan to actually help exports, which will probably be a good thing.
What is your view and outlook for precious metals such as gold and silver?
Yeah, I love precious metals right now. I think they're really in a sweet spot to do well. So gold, my target is up near 3,800.
3,800 by the end of 2025.
I think it'll hit that probably by October this year or a lot
Usually the
sooner.
summer is like quiet time for precious metals, especially gold, right?
Traditionally, yes.
Mhm.
This time is different because we have concerns about the one big beautiful bill coming due potentially in July, and the discussions about that cause concerns fiscally, or a big look. Neither political party has been willing to address spending, which has become a much bigger problem for the U.S. after the spending since COVID, just in the last few years. So, I think that is a concern, and I think that with the economy potentially weakening slightly, you can see more and more rate cuts being added over the next year. That's a great environment for precious metals. So I see gold and silver actually doing quite well. Copper and silver recently broke out. So not only just the precious metals, but also the industrial metals. Some of that could be based on, thinking towards aluminum tariffs, of course, and steel, helping steel and aluminum. But I was encouraged to see the move in copper technically the other day. And I think that along with silver, of course, China is one of the biggest importers of silver ores in the world. So my thinking is that both of those should push higher.
Mhm. And you just talk about the technology and energy sector. Do you see any sector rotation in the market right now?
Well, there has been a big rotation back into technology and really out of healthcare in recent months. And so healthcare, because of pressure on drug pricing and cuts, as well as just potentially the new administration, that they're putting a lot of pressure on pharmaceutical companies, and so we've seen healthcare underperform dramatically, along with energy. Um, Outside of that, I don't. There hasn't been any huge rotation. We still see a lot of strength in financials and industrials and tech, and so that's a really good sign for the stock market. Discretionary has started to come back versus staples, and that happened since April. So that's basically a sign of more risk on, risk off type sentiment. And so it's very helpful to see discretionary come back. That's a very good sign. Utilities is probably the big sector that everybody is scratching their heads because normally it tends to be very defensive.
Mhm.
But in this case, there's a lot of power generation companies that are benefiting. And so that's been the number one performer of the year. I still think that continues. Utilities is a very strong sector right now.
Yeah, you said you see some rotations back to technology. Do you think right now at this moment technology sector is already overvalued? That's a lot of people are talking about.
No, I don't. I wouldn't say that at all. I think there's a lot of, to be priced at around in the low 20s is really nothing compared to what we saw technology priced at back during the dot-com boom, and certainly in the 90s. We saw many of these companies priced at 50, 60, even 90 times earnings. So many of them, continue to impress with regards to earnings. Ever so slight signs of slowing, but really not meaningful enough. And so I'm not a fundamental analyst by trade. I look at technicals, of course. So I don't make valuations, but I even our own Tom Lee has been very bullish on the prospects for technology.
Technology,
So I
yeah,
think
he has
that
been really
continues.
bullish on technology in the past few years, right?
That's right.
Yeah. So, are there any technical indicators you are watching closely right now, whether it's the market breadth or the intermarket ratios or volatility?
Yeah, a lot of that depends on your time frame. Some of these ratios and indicators are best used for short-term purposes, and others are more longer-term. Uh, for short-term, I make use of things like Elliott wave analysis, DeMark for contrarian type signals within uptrends. I make use of a lot of cycles in my work, and so those are helpful. They help to pinpoint the April bottom, and they suggest that August might also be a top. And many of those are suggesting also that the middle part of June can also be choppy and down. What I specifically look for that would be a problem would be evidence of technology starting to roll over. If breadth starts to wane more substantially, fewer stocks making new highs versus lows, that's important. And if sentiment were to start to get more bullish, that would be a concern. Right now, we've seen the opposite. Sentiment has remained very subdued. People are very reluctant to jump on board the rally. It has gotten less bearish, of course, than April, as might be expected after a 20% rally, but it's nowhere near optimistic. So for that reason, I remain actually quite bullish on the stock market because all these CTAs and hedge funds are going to have to rush to get into the market to really play catch up for performance, and that can help to drive equity returns.